Welcome to IG's Charting the Markets on this Friday the 8th of November. Today we're doing a special show dedicated to Andrew's Pitchfork. We'll be taking a look at some up-to-date charts and how to use Pitchfork in the context of the DAX and the Dow Jones Industrial Average. And on the foreign exchange markets, we'll be taking a look specifically at cable and also sterling, euro against the sterling trade, and applying the Pitchfork analysis to those just to show you that it really does work out of the classroom. But taking us through the very beginnings and how it's applied and some of the charts to construct how Pitchfork is used in modern day technical analysis is Eddie Tofpik from ADMISI. Eddie, it's good to have you back here in the studio.
It's a pleasure.
I know that you do a high level technical analysis with a lot of students at the STA, and we'll be putting this on the STA website shortly, as well as across IG.com. But first of all, Andrew's Pitchfork. Why Andrew's Pitchfork?
It's binary. It either fits or it doesn't. It's one of those few things in technical analysis that you either put it on and it works, or you can't put it actually on. It won't actually fit properly.
And what's the genesis of it? Where's it come from? Who was Andrews?
Dr. Alan Andrews was supported, his patron was Babson, who prior to that had worked on work from Newton and going back then to Renaissance and possibly even medieval mathematicians on a thing called the median line method. This then had developed by Dr. Alan Andrews into what he developed or called the median line method, or the Alan Andrews Pitchfork.
Yeah, we know it today as the Andrews Pitchfork.
We know it as the
and I know on the IG platform you can do it, but it pops up if you put the Pitchfork tool on there. You've brought along a lot of charts, and you quickly whiz through. Talk to us about where we start, and you've got here a chart of the S&P futures from 2 years ago.
Now this is actually from a presentation I made at the Society of Technical Analysts about Andrew's Pitchfork, and I used an example, the S&P futures from 2016, and very simply, this is how you draw one. You take a significant low, in this particular point A, which is back in February 16. You then take a significant high, the next significant high, which in this point was point B, and then the next significant low after that, which is point C. Now, it's very important make sure point C is never lower than point A. If you do, it's an abuse. Ignore it. It's not applicable. There are so many people who do that sort of drawing on there, but it's not applicable. It has to be, C has to be above A. Simple as that. This is for a bullish one. Then you bisect the line between points B and C, and that gives you point X in the middle. And with me so far?
And that's absolutely midpoint.
That's absolutely midpoint. And then you draw a line from the original point A through point X, let it carry on into the future, and then draw a parallel one to point B and another one to point C. Now, actually using the charting software I do, that's your basic Andrew's, bullish Andrew's Pitchfork, and this is what it looks like in real life. That's the actual one I used at that time.
So it's three trend lines, basically.
It's three trend lines. They're all parallel to each other, and they're named after the tines of a pitchfork. So it gives you the upper, lower, and the middle one, obviously. Why is this important? Because it led to this, and this is why it really is important. This is the rally from Q4 16 up to Q1 18, which was into then new territory and encapsulated everything. It gave you the bullish angle of attack of the market. It pointed out the high at that time in 2018, and even when it was broken below, it had an echo because it was such a strong pitchfork that you could see the work later on. It's an example, as I say, of an excellent bullish angle of attack. Plus it's dynamic. The support and the resistance changes each day. It's not standard, just like a line drawn in the sand. It literally moves every day. Now, I then said you've got to look at some of the recently broken to show supports and resistances. And we're going to look at a closer one at that. As you can see, the high of that market back in January 18 was pointed out by that pitchfork, which was drawn back in 2016. So, and then the point I'd like to point out is you also see some echoes, I call them, which is the action that's done late February into March with the middle tine as being the high and the lower tine being low, and obviously it was broken again once more. They don't seem to work sometimes. That's one that doesn't work. You can try drawing it, that's fine. It's not an abuse, it just doesn't work on there, so therefore you ignore it. So it may be too early, it may be for whatever reason. Then Dr. Alan Andrews had a pupil called Jerome Schiff who added another element, and he said, let's have that one there. And that is a standard bearish Schiff pitchfork. And he drew it from a vertical line which is between the top point A, the bottom of the market, then point B, bisecting them again with point X, and instead of using the original point A, you then draw a new point from the middle there. And that was the original Schiff pitchfork.
So are these tines then, obviously they're parallel again in a different direction, but are they the same distance apart as the original?
No.
They can be different.
No, they absolutely do not need to be the same distance. Right. It's very unlikely they will be actually the same distance.
Yeah, of course.
There's no relation to what happened in the past directly to what's happening in the future, because it's a different set of circumstances now.
But it turns a corner in
exactly.
In the pattern. Right.
Now, what Jerome Schiff wanted to do was to put a time element into the construction of these pitchforks, and that is why it's drawn that way. I personally don't use the standard one. It's what's called a modified one. Right. It's still like that. It's just basically because I just use it, it's easier to do on my machine, right. Which is instead of drawing between point A and the level of point B, I actually just draw it to point B. Yeah. So that's called a modified Schiff pitchfork. As you can see, it has some impact there because the middle tine on the way down was acting as an area of congestion on the drop down rather than just in the middle of nowhere. Now, and that's explaining literally why I'm using it and using that point X as an anchor on that. Now, you will see that the geometry of it actually is that they are parallel lines for a modified Schiff to the downtrend. Simple as that. So it's basically drawing the downtrend, drawing it to the lowest point, and then bisecting with another trend line which is running at half the distance. For bullish one, it's the other way around, obviously. Course, yeah. Now, this is, I called this is something to watch out for as pedigree. When a Schiff pitchfork, a modified Schiff pitchfork, crosses over an original Andrews pitchfork, there are periods where you may see one or more of these things: extreme volatility, a change in trend, a reinforcement of a trend. So it may see suddenly, as in this particular instance when we had that one back at the end of March, the market zipped back up for a little bit, didn't like it up there, hit the top of the Schiff pitchfork and then came down. I didn't draw what happened afterwards because that was not yet happening yet, but I do warn you, those specific dates tend to be quite important and it's worthwhile watching. I can't remember, somebody calls them fighting tines, but I just call them just crossovers, yeah. And they are important. Okay, I then ran through at that time some interesting ones. This was heating oil, which had both of them running through at the same time. The center tine was acting, of the Andrews, was acting as an attractor for the market, and the Schiff pitchfork was acting in concert as resistance as well. So it was actually quite an interesting one, and you had a crossover coming up in the future at that point. LME 3-month copper was brilliant. Oh, it was just so beautiful.
When did you know this was?
I drew this to say in February 18, and right. I said, okay, that's where the support's going to be, that's where the resistance is going to be, that's the angle of attack going down. It's a bearish angle of attack. It went through the long moving average, which you can see there, and it carried on for quite a while after that. Now, this is two basic rules. Market bounces between them. The medium will hold it. It's not necessarily a cut line where it doesn't go anywhere through that. It literally is acting as support, resistance, alternatively. And don't force them. Sometimes people try to draw things where the high in that particular instance, which is the one, is below the next high. It's just, people don't force it. It fits or it doesn't.
This is the one thing about technical analysis, of course, isn't it? It does, you do sometimes do get people that force the situation. Keeping with this chart up on the screen at the moment, I just want to ask you one question. At what point do you know this is an Andrews pitchfork? You've explained how you start to draw it, and obviously you've got to have a high and a low from the point at which you start at. Yeah. When do you know that this is?
In this one, I would say probably the last week of February. If any specific date, I'd probably say there around about the 27th, because when you saw that second high, the lower high, and then it turned down. Yeah, okay. There was a key reversal there during that week, you can see, and it failed. And that's probably when I said, there's something going on here, I think I better draw an Andrews pitchfork. Yeah. And then it just developed.
Yeah, yeah, okay, yep.
And I'll pause now for any other questions you may have. That's what I did originally, but This is what is happening now. These are real charts now that you're going to see what's happening. The first one is the German DAX index. It's a beautiful chart.
Right.
It's a chart that Harrods would sell you. It's a really, really beautiful chart. It's falling along the angle of attack of the center tine. It is just beautiful. There's nothing else to say about that. It fits, so therefore it fits. You know, it's because it is. This is one for the S&P futures. Again, how can you say where's going to be the next support and resistance? It's the all-time high. Well, you look at that. I mean, you can see as they go forward. At the moment, the support is around about 30.80 on the futures contract for the front month, and it carries on that way.
Just staying on this chart and asking a quick question. This is very similar to the DAX in as much as it's going up, same sort of direction. Pitchfork, obviously, on top of it. What are you doing here precisely? Are you buying when it goes over the middle up until it gets the top tine and then you sell? What are the indicators to buy and sell within a trend?
I'm not allowed under the FCA regulations to actually give buy and sell recommendations.
No,
what I can say is that this is the bullish angle of attack.
But as a teacher?
As a teacher, I would say look at the bullish angle of attack.
Right.
And then you have to then utilize your own knowledge of being able to trade.
Okay.
And that bullish angle of attack, if you're being sold, look, this thing is going that way.
Yeah.
And it may weave across the road a bit.
A little bit, yeah.
You know when to turn the wheel.
Yeah.
If it goes too far to the left, you need to turn the wheel to the right.
Okay.
And if you take that inspiration of when to turn the wheel, that is the journey. This is the journey we're doing with this thing.
Yeah. Okay. All right. Let's carry on. So that's
the interesting one here. It's pound sterling. Now, I drew that and I used
these are all daily bars, aren't they?
These are all daily bars. I've got some really long-term ones. You don't want to see the one on sterling. That's really... anyway, the euro's even better. In this particular instance, the center tine, and I want to show this one, is not acting as the bullish angle of attack.
Right.
But the upper tine is acting as resistance, as you can see. As soon as it came close, in two specific instances, it came close. Okay, you could say roundophobia, but why is that line not very far from it? Because it's actually accurate. Now, the support line there is going to be around about 127.5. That's when that one, and if it's broken, I'll draw a shift and use that one instead.
Right.
And that comes down to those things. And if it's broken properly, I just take it off after a while because there's no point in having it.
Yeah.
It's dead.
Yeah.
It either fits or it doesn't. It goes back to that same binary rule. That's sterling. This is what euro sterling looks like, which again is not a dissimilar function because of the way it is. As you can see, the support there, 85.60. Why would it? And the center tine is not acting as an angle of attack, but it is giving you the overall direction of which the market is heading. Specifically between mid-October to probably where this line is going through is probably going to be the week of the 25th of November when the upper tine comes in. That's when the bearish pressure will emerge from this specific Andrews Pitchfork.
I think that concludes the charts you brought.
I've got one.
You've got one more, have
I've
you?
got a couple of... this is the Dow Jones, which has both of them.
Oh, yes, okay. Yep.
Which is Andrews and the shift, so you can see they're in turn. And the best one of all, spot palladium.
We've been talking a lot about this.
New all-time high. How can you tell where the resistance is going to be? Is because you've drawn one already.
Right. Pitchfork works. Well, it works for you.
It works if you apply it. Just be very careful with it. It's like, you know, it's a knife. It's all like all tools. You don't really want to give it in the hands of children.
You asked if I had any questions just a few slides ago, and I wanted to wait till the end because I think it's important to explain to people that, as you said, it's something that only people that understand how to trade can use, isn't it? Because you understand the levels of, as you said, resistance, support, and working within a confined space dictated to by the Pitchfork. What about some of the other things that we hear a lot about? Fibonacci's, candlesticks. I think you mentioned one particular candlestick in particular there to give you an idea as to when market turned in a different direction. What sort of other technical analysis tools do you use in conjunction with Pitchfork?
I prefer things that have got pedigree. Candlesticks is about 250, 280 years old in origin. So I use those on a daily basis. They give you very good short-term indications of what's happening over the previous section's action, whether it's intraday, daily, weekly, monthly. Moving average, obviously, everybody uses. I'd also use probably Fibonacci quite a bit. because it gives you the 50%, the 38.2%, and the 61.8, the specific ones there. The standard ones are very, very useful for me. I then tend not to use indicators. I like to look at the raw data. I use traditional analysis, trend lines, resistance, pattern analysis, head and shoulders, flags, pennants, all those sort of things, etc. Triple tops, double bottoms, whatever. I use a little bit of GAN. My moving average is a GAN based, so I tend to use those rather than actually try and optimize it to a round number. And occasionally I'll use some other piece of analysis which I haven't used for a long, long time. I may say, we were speaking earlier about using point and figure. I may occasionally just go, what the hell, I don't understand what's going on. Let's look at it in the form of another type of chart.
Right.
And I maybe look at it in point and figure or something like that.
So again, this underscores the need to understand a very broad range of technical analysis tools in order to get and work specifically within Pitchfork.
And you get comfortable with what you're comfortable with.
Quite often, as we know from Dow theory, that when you get indices traveling a certain direction, quite often others follow and they all move in the same sort of direction. I mean, you had there the DAX and the S&P 500 on Pitchforks. I mean, do you go...
The CAC is as well as there.
I was going to say, if you find it working on 2 or 3, you can just apply it.
I didn't want to bring a CAC because there had been too many of those. I wanted to give a bit of variety, so I gave a metal, I gave a currency, and I gave some indexes. So yes, it works perfectly on the CAC. The CAC is just a really beautiful one. It does on as well.
Yeah, and we had a look there as we indicated. These are the daily bars. You say you've got some really long Pitchforks.
Yeah, I've got.
What do you do? I mean, do you do monthlies, weeklies, or
once a year in January? I sit down and throw all my other chart analysis away and don't bother looking at it, and look at some charts that I've set aside.
So you start with a completely clear...
No, I don't bother looking at the daily stuff.
Right.
I just don't even look at it. Right. And I go to weekly. Occasionally, I did it for Bitcoin because there wasn't that much data. But I tend to look at monthly data in currencies, in commodities. I do things such as soybeans, I do the metals, I do energy brands as well. And I'll look at them and I'll give an analysis in January for a year ahead. And that is real long-term stuff, multi-year stuff. There's stuff I've got going back to 97 in one particular instance. There's a trend line that I look at and I still use, and it's still valid.
And you say there sometimes you take Pitchforks off if they break.
There's no point in having them.
But does the trend never go back into a channel that you established?
Well, that's what I mentioned about there's echoes. You may say, for example, this particular one we've got here, spot palladium, if it breaks through the lower time there, which is today running through around about 1680, then you'll find occasionally, especially one that's been established such a long while, that it'll run along the underside of it and still utilize it. Right. And then it will give it up. It's like a ghost, or I call it an echo.
Yes, yeah. Look, it's a pleasure. Thank you so much indeed for taking it apart and putting it all back together again, explaining to us how it all works. And I, for one, am going to go away now and take a relook at my charts to see whether or not I can apply Pitchfork analysis. But Eddie, thank you so much indeed for joining us. That there, taking a look at Andrew's Pitchfork in some detail on how to apply it to some of the up-to-date charts, is Eddie Tofpik from ADMISI. That's today's Chart in the Markets.